guys, welcome back. It's Josh with the Financial Advisor Car Guy. This week we're going to go a little bit more on the financial side of things. So if you are tuning in to watch some sort of car update, you're out of luck this week. We're going to talk about money markets and a really easy way for you to make 5% on your money. So that's the gimmick right there, right? Money market is paying 5%. And so if you have cash savings sitting in the bank, you're probably earning 0.1 or less, maybe 0.01 in some cases. And interest rates have been up for quite a while. I mean, unless you've been living under a rock, interest, if you're going to borrow money, right? Credit card rates are sky high. If you're going to buy a new home, a new car, whatever it is, you're going to pay, 6, 7, 8% or more to borrow money. 3 years ago, to do that, you could have done it for under 3%. So from that standpoint, realistically, money has gotten quite expensive to borrow. Anybody who refied their house sub 3%, you're sitting on really inexpensive money. I would encourage you to sit on that loan forever. Don't refi again. Don't pay it off early. Just, that's cheap money. But if you've got money sitting in the bank, savings money, which you should have, let me tell you, you do not want it to sit stagnant. You need it to continue to grow with inflation. And over the last several years, that really hasn't been possible because money was so cheap to borrow. You also weren't earning anything on that money sitting idle. To grow your money, you would have had to invest, whether that be stocks, bonds, mutual funds, whatever the instrument is. You needed to invest that money and bear a little bit of risk to get returns. Today, that's not the case. If I've got $1 million and I need it to generate $50,000 a year just to pay my utilities and food and clothes and maybe a vacation, and if I have a mortgage, maybe it's paying, whatever, 50 grand a year, you can do that with no risk. In fact, you could get more like $53,000 or $54,000 a year with no risk right now today. So I'll stop there for a moment. And if you've got questions about that, comment down below because I can share some information with you. It's not going to cost you anything. And we can get you 5% or more. Now, if you need more than 5% return, you do have to bear some risk, but there's ways to do that as well. I definitely think that there's a huge opportunity coming our way because if you're an investor at all, you've probably noticed that the last 2 years, 3 years, maybe even 3.5 years, your bonds have been down in value. So what ends up happening is they're continuing to pay you interest, but they're being sold at a discount. So I'm going to remind you a little bit of a simple concept, but if you go buy a bond and let's say it's a 10 or a 20 or a 30-year bond with, Ford or General Motors, you might have locked in a 20-year bond that's going to pay you 4%. Now that's good, slow and steady, just you're earning your income. You put money into something like that, let's call it 50 grand or 100 grand. You put that in, you're going to earn that interest every single year. Using that $1 million mark, right? If you put $1 million in a 4% bond, you're going to get $40,000 a year. So not quite that 50,000 or whatever a money market's going to give you today. That's exactly why bonds are not worth what they were a few years ago. Because if I'm going to lock my money away for any length of time, I need a greater return. I don't want to put money away for 20 years to earn 4%. If I can put it into an investment account in a mutual fund that's earning more than 5. So what we saw happen was a lot of people took their money out of their bonds and put it into money markets or shorter term CDs and things like that are maybe even FDIC insured. So it was kind of a insult to injury sort of approach where bonds plummeted in value because people were pulling money out. So you can today go in and buy these bonds secondhand, and they might still be paying 4.5, maybe 4 3/4. So you're going to get an okay return that's a little less than the money market. But if you can buy a bond at 4, 5, 6, 10% off, what ends up happening is if you hold it all the way through to maturity, not only are you going to get that annual interest, but at the end, they're going to give you full face value back for that bond. So again, using real world numbers, let's use $100,000 as our number. If I put $100,000 into a bond that's going to mature in 5 years, if I can get it at a 5% discount, for example, I pay 95 cents on the dollar, essentially, right? I'm going to earn whatever the face value coupon is. So maybe it's 4.75 or whatever, okay? So let's say 4.75. Now, fast forward 5 years, I've earned 4.75 every year for 5 years. Now I get my money back because the bond matures. But instead of 95,000, I actually get 100,000. They give me the full face value back. So I just made an extra $5,000, an extra 5%, right? That was the discount that I bought. So now I've earned, let's call it $4,750 for 5 years. And then this bonus of $5,000 at the end. So if we take that $5,000 and divide it over the 5 years, I effectively just earned 5.75% each year I owned that bond. Now, 5.75 is better than the money market today. So I get it. I might have lost you in there, and I apologize if I did, but just understand that there are ways to make really okay money with very little risk. There's not a lot of risk in bonds. And the upside to some of that is you make it a tax benefit. There are bonds that are, state tax-free, federally tax-free. So your taxable equivalent, if you earn 5.75 in that scenario, but if it's a double tax-free bond, that'd be the equivalent of like 6.5 or 7%, depending on your tax bracket. So I'm not going to give you tax advice. That's not my intent here. I just want you to know that with money market rates being where they are, that's a good safe place to park your money. If you have a tax issue or if you have, longer term needs, things like that, then look at this bond strategy I'm sharing with you guys today. And I think you can maximize your money long term with very little risk. And I'm not suggesting that you go liquidate your stock portfolio to do this. Long term, stocks are going to continue to perform better than bonds will. But all that to say, there is some money to be made on the short term with fixed vehicles that aren't going to be volatile or as volatile. And you're not going to be mad you did it. So it's something to consider. Make sure you talk to your financial advisor, talk to your CPA, figure out a strategy that's good for you. If you don't have a CPA or you don't have a financial advisor or anybody to talk to, Google's a great resource, or contact someone like myself. Like I said, comment down below. Happy to answer any questions or concerns. You can go ahead and email me directly, facarguy@gmail.com. Happy to answer questions. I'm not going to charge you money, no consultation fees or any of that stuff. I'm just happy to answer questions. But I want to be a resource to you guys. That's why I do this. A lot of the time I am sharing about a project or whatever we're doing on the cars, but that's not always the case. Sometimes I just want to share this good information with you. It costs you nothing, but you can maximize your return. And hopefully, maybe that savings helps you get into your car or whatever it is you're looking to achieve. So thanks again, you guys. I really appreciate the followers. I've gained another, 10 followers this week, which is awesome. I very much appreciate your feedback. You guys do like and share and subscribe and all that stuff, but continue to do that. If this is your first time here on the page, go check out the other 170 videos that I've done. Again, most of them are about cars, not as many about financial stuff. But to close, I am just going to tell you, I am a financial advisor. I am a licensed financial advisor. And so this information is coming from a professional. I'm not just spouting my opinion or my thoughts. But like I said, I'm happy to go down that path and talk a little bit deeper with you guys if that's relevant, if it's helpful, right? So contact me, but otherwise, stay tuned. Come back next week. I do have a little bit of a kind of a fun, I'll call it a surprise. It's not, you'll just have to come back and watch. So thanks for watching, but make sure that you remember, as always, may every investment you make be a good one. Till next time.